Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a mini market update for you for Bitcoin and the rest of these cryptocurrencies for Friday, September the 4th. Before I jump into the content, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you have not already. Make sure you check the description for a link to join the Patreon. It's just $7 a month. I share a lot more frequent updates in there, and I'm going to start sharing some trade examples. Now, full disclosure, I'm not going to share them in advance because that gets into a whole other ballpark, which I do with my Discord members, but I am going to share some trade examples. So hopefully you can learn from some of the setups and some of the ways that I trade. All right, let's jump into this thing. I'm going to try to make this under 10 minutes. So first things first, a couple lines to watch. On Bitcoin, do not forget, all we did today was tag the 19-week moving average. If you went long on that 19-week moving average, congratulations. It actually pumped about 5% in less than 10 minutes. Awesome trade. Hopefully you're able to take advantage of that. As long as we're above that 19-week moving average, I think it's dangerous to get overly bearish. But here's what I'm saying, guys. Here's what I think is going to happen. And this is just an educated guess. I could be completely wrong. When I zoom into the one-day chart, what I see is a 50 moving average, which we all know by now is a line in the sand. Above it is bullish, below it is bearish. But that 50 moving average lines up awful close with what I consider to be the neckline of this wonky head and shoulders, right? Looks like this. And again, I'm going fast because I got lots to do today. So hopefully you understand what I'm getting at. Head and shoulders there. This is the neckline. More often than not, you'll get a retest of that neckline before more downside. So there's a neckline right up around 11.1. Here's a 50-day moving average. Very common to get a retest of it before more downside. Right up around 11.1. And magically, if you guys remember, we had a gap right here. In fact, let me draw it like this. You know me, gaps love to fill. So we had this gap, liquidity gap. It did fill in on this red candle, but the ironic part is it actually fell so hard and so fast that it created a brand new gap, and that gap looks like this. So again, top of that gap is right up around that neckline. It's right up around that 50 moving average, and then we have the bottom of the parallel channel on top of that. So I am personally a bear looking for shorts, but I'm not looking for shorts until we get some type of move toward that $11,000 level, unless something changes, right? And of course, that's totally possible. We did have this rising wedge, which I talked about on and off for a few weeks. We broke south of it. Of course, if you measure that rising wedge, it was about a $1,600 breakdown target. Broke out right there. If we put that on there, it gives target down around 10.1. Boom, target's been hit, right? So the rising wedge is now done. And of course, the parallel channel, which is a bullish channel, is now broken. So again, looking for some type of bearish retest so that I can get short on that thing. I don't know if it's going to get that high, right? Pretty gloomy outlook overall, but I don't want to try to get into a short early. I'd rather miss the opportunity than chase it. So personally, I'm waiting for a move toward 11K, okay? On the 3-day chart, what I'm watching there is this has actually come down really deep inside of that bear market box. So if this candle cannot pull up and close, this is going to make me lean toward more downside. But I don't want to get overzealous because the reality is all this did so far was test these old highs, and it could just be a simple case of, you know, resistance flipping to support with more upside to come. So again, that's why I want to be cautious and make sure that I'm not rushing into positions based on what I think is going to happen. I want to wait and let the charts dictate what trades I take. All right, real quickly, I'm going to give you a 60-second or maybe a 2-minute overview of the stock market. Here's what I'm seeing on stocks. This is actually the Dow Jones Industrial Average. You can see this was the line of support. This thing went all the way back to February, right? It's been sliced through like a hot knife through butter. So that is indeed bearish. But technically speaking, if you look at price action, all it's done is come down and test this old resistance flip support. So I don't want to get too overly bearish. I'm almost thinking there's going to be some type of bounce and then more downside, which would, you know, make sense with crypto. If crypto bounces toward 11K, you know, if this bounces, maybe that's what prompts crypto to bounce as well toward $11,000 Bitcoin and then more downside. If I look at the Nasdaq, same type of deal. We have the support. It's been chopped through. This thing has moved down, but technically speaking, it's just retesting these old highs back here, and it's just barely above its 50-day moving average as well. So same type of deal. It wouldn't shock me to see a bounce and then more downside. And finally, we'll move over to the S&P 500. Exact same deal, right? Coming down and retesting these highs back here. This is not a perfect line, right? Somewhere in that ballpark. This one looks a little more bearish. It looks like it's trying to chop through. So keep that in mind. This might actually be the line here. But basically somewhere up around that level, right? I can't get the thing to line up, but let me zoom in. It's going to drive me nuts. OCD much? Get on top of that candle, not below it. There we go. Jeez Louise. And this is why I can't do short videos. All right, so that is a line of support. You can see here that it is indeed being tested, but it has not broke through that line yet. It has broke through the RSI support. Still above the 50-day and 200-day moving average. So same deal. Wouldn't shock me to get that dead cat bounce, that bearish retest, and then more downside, right? All these markets really, they're going hand in hand right now. I'm viewing this bounce as basically a relief of oversold conditions and not a legit continuation of an uptrend, right? I'm just viewing them as dead cat bounces. So time will tell. We are extremely oversold still, so that's why I don't want to be getting short down here. Yesterday, the ironic thing is I'm a bear, but I took 6 longs yesterday. I took 5 on Bitcoin and I took 1 on the S&P 500 and made money on every one of those. Yesterday was actually an excellent day. I made about 6% all in all on my trade fund. I was up a little more than that, but one of my trailing stops got hit overnight and stopped me out, unfortunately. So, still stopped me out in profit, so it was a good day. Increased my trade fund quite a bit, if I can talk. But it was ironic because, I am a bear and here I am longing Bitcoin. Truth be told, I should have just shorted. I could have made more in one good short than all those longs, but, that's life. So that's what I'm watching right now, guys. We're about 7 minutes, so I don't want to, drag this thing out. I just want to say be careful. I know there's a lot of emotions. They're running high right now. You have a lot of people who are screaming, buy the dip, buy the dip, buy the dip. You have other people screaming that this thing is going way down and that the crash has started. Just remember that nobody knows, right? No matter how confident they are, no matter how arrogant they are, no matter how sure of themselves they are, nobody knows where this thing is going. We can all make guesses. That's all it is. We look at a chart, we read the chart, we do our best to interpret that chart, and then we make an educated guess at what the market is doing. But at the end of the day, it's not being right or wrong that makes people successful or unsuccessful traders. It's risk management. You can be wrong half the time and still make a really good living, or you can be right 90% of the time and still lose money if you're not using proper risk management. So risk management's the name of the game. That is the #1 skill you should master, and then you can be wrong a whole lot of the time and still make a pretty good living. All right. So me personally, that's my plan. I'm waiting for the bounce. I'm waiting to see if we can get up toward that 11K level. And unless something drastic has changed between now and then, I probably will be looking to short it at that point, like up around here maybe. Okay. Time will tell. I'll shoot you another video in a few days and we'll see where that 3-day candle closes at, and we'll see where the week closes at, and we'll try to make some assumptions going forward from there. As always, please remember, I am just some guy sitting in a spare bedroom. Nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency. If you enjoyed this video, please be sure and give it a thumbs up. Please be sure to subscribe to the channel. And of course, if you haven't already, make sure you join the Patreon. It's just $7 a month. It gives you access to a lot more frequent updates. And like I said, I'm going to be sharing some trade examples and things so that people can learn from some of the trades that I'm personally taking. All right, this is James with Crypto Common Sense, reminding you to please trade safe and have a wonderful weekend.